Welcome into another edition of Market Takes. I know you could have been anywhere in the world, but you are here with me, and I appreciate that. I'm Dion Rabowen, reporter at the Wall Street Journal. Today, we are digging into the latest existing home sales report, talking about and explaining what's going on with the housing market right now. Existing home sales, we know, are about 80% of the overall housing market. So as we talk through this report, we're going to talk through the big picture in housing. We're going to talk about what the report said, obviously, and how that compared to expectations. Then we're going to talk about how this fit with other recent housing reports that we've seen. We talked a little bit about this on Monday's Look Ahead, looking forward to this week's data. We're going to talk about how this fits with the current inflation narrative, take a little look at what's going on in the markets, and then talk about what comes next, because this report and how it fits into everything else that's going on is going to tell us some important things about what's going on with the economy and also what's going on with the overall housing market. So let's get into that. First things first, I want to talk about today's report and what the report said. So I want to throw up here a chart on your screen so you can just see for yourself what we've got going on in the markets. Now, as you see there, those last four reports, you see there was a clear trend moving downward, and then the numbers started to pick up and those bars get a little bit higher as we moved into 2023. So for May, you saw 4.3 million homes sold. That's that last bar there on your screen. Existing home sales rose 0.2%. They were expected to drop 0.9%. So economists were expecting that declining trend that we had seen coming into this year to pick up again. And we had seen those two reports in a row come in negative, but this really reverses that trend. And we saw home sales rise slightly. We also saw prices rise just a little bit to $396,000. The average existing home sold for about $396,000, up from $395,000 a month ago. Now, one thing that you're going to hear a lot about from folks is this was the biggest one-year drop since 2011. But if you look up there on your screen and you go back about a year, get to the middle of that 2022 number, well, you see those charts are where those bars are isn't really that difference. The decline was in prices, and the decline in terms of number of sales wasn't that great. So this chart really just illustrating that we are seeing again a pickup in the number of used homes sold, or the number of existing homes sold, and we are not seeing the continuation of that declining number. That was what the Fed wants to see. We'll get into why the Fed wants to see that in just a moment. When we talk about prices, right, there was the biggest drop in prices since 2011. That's what I was referring to a little bit earlier. The biggest year-over-year drop in prices, but that year-over-year drop in prices was from $408,000 to $396,000. Think about it, if you're going out to buy a home, that's not a big difference. It's only about a 3.1% drop. It's just because, generally speaking, home prices have not declined since 2011 very much. So a 3.1% drop is the biggest drop we've seen since 2011. That should just tell you, listen, that's not really a big deal. And that's a year-over-year decline. So in 1 year, prices dropped 3.1%. You kind of shrug that off. If you're someone who's thinking about buying a home, or if you're someone who's thinking about selling a home, that really doesn't matter to you. The momentum stalling out here really suggests that we could have hit a floor. Now, what the Fed wants is for home sales to continue to drop because it makes rent prices drop with those higher rates. With higher rates up about double where they were a little more than a year ago or a year and a half ago, there's an expectation that you're going to see home sales falling off a cliff. That hasn't happened. They've declined a lot from those huge highs, from those big highs we saw in 2021 and into 2022, but you're not seeing it fall off a cliff. We're still above 4 million sales per month, so that's a big deal. Also, the decline in the number of homes sold year over year seems to be flattening out. Now, this is 20% lower than the number of homes that were sold a year ago, but again, that trend is flattening. So in May 2022, there's about 20% less homes sold in May 23 than there were in May 22, but that's about the same as the previous 3 months. You saw a 23% decline the month before, 22.1% the month before, and 23.1% decline the month before that. All that to say, it was just rocketing lower. You saw declines each month getting bigger and bigger, down to a 37% year-over-year drop at the beginning of the year in January. And that's reversed course, and now we're only about a 20% drop. So again, it's lower. There are less sales, certainly, but the decline looks to be tapering off. All that to say that we have just really seen a flattening out of this trend. It's not picking back up yet, but there are reasons to believe that that could be happening when we look at some of the other data. Now, earlier this week, we got the NAHB Housing Market Index and Housing Starts data. Both of those reports came in much stronger than expected. I want to put up here on your screen the NAHB Housing Market Index. That came in this past month, beating expectations. And the trend you see on your screen now is that index, and that's an index of sentiment as well as sales, and it factors in new home sales a lot more. But this is really about home builders, right? Are folks going out and building more homes? Are they excited to build homes? And as you can see there is a clear pickup, and we've seen it since the start of this year. Every month you've seen since the start of this year that index has picked up, and now we're back at the highest level that we have seen on that index since May of 2022. You also have seen new home sales start to pick up, and this is why maybe you could start seeing a bit of a renaissance in the housing market if this trend starts to pick up. And this chart just really illustrating that rising sentiment that we've seen so far this year in the housing market in terms of especially that new home sales market. Housing starts were actually expected to decline, but rose by 22%. So a huge increase in the number of houses that are going to be built. Contracts are laid out there and folks saying, okay, we're gonna go out and build a new house. Those jumped by 22% last month, expected to decline, and we got instead a reversal. So when we look at the new home sales, up about 12% year over year and about 4% on the month, 683,000 homes sold. So that gives you an idea of the scale. Only about 700 new homes sold compared to 4.3 million existing homes sold. That shows you there's a lot more existing homes, than new homes to be sold. We look at April's big month-over-month gain. That's evidence that this construction of new homes is really starting to pick up, but that's largely because there's just very little inventory. Inventory is still at historic lows in the existing housing market. The sale of new homes is about 7.5 months. So you got about 7.5 months of the normal pace of sales for new homes. For existing homes, it's at just 3 months. And to give you an idea of historically where that is, that number of existing home supply peaked at about 12 months of supply back in 2010. So in 2010, we're coming off the 2008 global financial crisis, which was set off by the mortgage market crisis and the big, bust you had there. And really a lot of homes were being listed and put on the market, and there weren't a lot of buyers. Well, we had a record low of 1.7 months of supply in January of 2022. That's the low. So we're up from the low at 3 months right now, but still very far away from that high of 12 months of supply that we saw in 2010. And really between 2010 and 2022, you just saw that market just kind of decline in terms of the amount of months of supply on the market. That just really kind of fell, and we got from that 12 number to that 1.7 number, basically 2 months of supply on the market. We are seeing a continued trend of higher housing sales on the new home side, but we are not seeing that on the existing home side. We're seeing a flattening out. NAR, the National Association of Realtors chief economist Lawrence Yun, said something I thought was really interesting in today's existing home sales report. He said, quote, "Newly constructed homes are selling at a pace reminiscent of pre-pandemic times because of abundant inventory in that sector. However, existing home sales activity is down sizably due to the current supply being roughly half of the level of 2019. So really what we're seeing is a problem of supply, not enough supply, but still lots of demand. That's not what the Fed wants. The Fed wants to reduce demand. The Fed's goal is to make you and I, people who might want to go out and buy a home, say, you know what, man, I want to buy a house, but these rates are too high. Oh, it's going to cost me so much money to go out and get a mortgage. I'd rather not. I'd rather just rent, or stay in my current place where I am. Well, that doesn't seem to be happening. There still is a lot of demand out there for housing, and there's just not supply. So folks are still going out looking. They're still on Zillow. They're still scrolling. They're still going out and hitting those open houses and things like that. But they're just not buying because they're not finding anything that is in their price range or that they like or that they can afford because rates are so high, but also home prices are still high. We're down 3.1% from what was near record highs a year ago. So again, we're still seeing all the problems that were existing in the housing market continue. And now we're starting to see those existing home sales level off and not fall anymore. That could play a big role in overall inflation. So when we talk about inflation, we've got to take a look at the CPI, the Consumer Price Index. Want to put that chart up here on your screen right now. So when you're talking about the trend, and that's what always matters, you see there from the beginning of 2021, and I wanted to compare this to that existing home sales chart that I showed you before. It just rises up, and then since that peak in the middle of 2022, you see there on your screen, inflation has just continued to come down. It's consistently declined every month really since then, and you see that nice wave pattern down. That's not what you see from the existing home sales report. That's showing it comes down, but then it picks up again, and now we're plateauing at that higher level. Wanted to just show the CPI chart to illustrate the way that inflation has moved and how that's different from overall existing home sales. Housing is the biggest component of core CPI, which is held above 3%, or held above 5%, excuse me. Housing is about 40% of that core CPI number that the Fed watches. So really, this is telling us right now that inflation, while it's been coming down consistently, the trend that we are seeing in home sales is not going along with that and falling as well. And we could be seeing a leading indicator of inflation stalling out, or maybe even picking back up if inflation follows that NAHB housing market index that I showed you just a little bit earlier. Things to watch out for. However, our real-time indicators are telling us that rent prices are going down. CoreLogic showed single-family rent slowed to only a gain of 3.7% year over year. Now, in April, that tells you it's still rising. Rent is still rising according to CoreLogic, but that's down from about 14% increases at the same time in 2022. All US metros in the CoreLogic survey posted an increase of just single digits or less. So that shows you that the inflation is coming down in rents, except for Las Vegas. That was the one which posted a small annual loss. Rent.com survey actually showed a negative 0.57% drop in annual prices. So we are seeing rents decline. But again, as housing prices go up and as those rates stay high, landlords, owners are going to have to pay more, and they're going to pass that cost on to tenants, renters, et cetera, et cetera. And so we could start to see those rental prices continuing to pick back up. Now, what I want to do right now is let's take a look at the markets. I want to throw this up here on your screen and just show you what we're looking at in the markets right now. This is an overview of what we're looking at on WSJ.com. You see the Dow is down about 0.2%, the S&P about flat on the day, the NASDAQ holding up about 0.5%. I thought what was really interesting is crude you're seeing here is down about 5%. Gold is down about 1%. So we've got some interesting moves going on in the market. I think you saw a big pickup when you look up here at the NASDAQ and some of these other stock indexes that you were seeing. Computer's running a little slow, apologize for that. But you did see a pickup right around that 10 o'clock number with this number of existing home sales. And really it seems like the market is just kind of bullishly moving upward. And this just illustrating the kind of trends that we have seen and are seeing from the market, especially stocks, which seem to be biased to move to the upside. It'll be interesting to see where we end today, because the NASDAQ up over 30% year to date, we are seeing some very interesting things in terms of the market. So listen, let's talk about big picture takeaways from this report. Big picture takeaway number one, don't be fooled by the headlines. You're gonna see folks, and I've already seen this, biggest annual drop in prices since 2011. Oh my gosh, the housing market is falling off a cliff. Don't believe the hype. I'm telling you right now, it's just a 3.1% drop. It's the biggest drop that we've seen since 2011 because mostly housing prices just go up. So it's unusual for them to go down, but that decrease you're seeing, not a major decrease, not anything that anyone is really going to get excited about, especially with mortgage rates still around 7%. The pace of home sales is lower than recent history, but it is not falling off a cliff. We are not seeing home sales cooperating with what the Fed wants to do. We are not seeing a decline in demand. Last but not least, I think the biggest surprise in the report was that it just shows how strong the demand for housing is. Prices still near record highs, rates have doubled since 2021, but sales are not falling. This could be bad news for what the Fed wants to do on inflation, because we know they watch that core number. We know that core CPI, core PCE, those two big inflation gauges that the Fed watches and talks about, are very tied to what's going on in the housing market and very tied to what's going on with how people are paying for shelter. Here, what comes next? Well, we are going to be right here on Market Takes, 10 a.m. Eastern on Monday morning. I hope you'll be with us for that. Next week, we'll be talking about the new home sales report. I think that's going to be big. Does it continue to show this trend of much higher sales, much higher prices? And what does that tell us about inflation? Also, the PCE report, which has been hasn't really been in the news that much. We've been talking about CPI, but I think this PCE report will be very interesting because it's going to tell us, where is the Fed's favorite gauge of inflation moving. It actually rose last month while CPI continued that decline that I showed you on your screen. So if PCE rises again, that could really be big news to the Fed. I'll tell you all about that on Monday at 10 a.m. Listen, that's going to do it for us here on Market Takes. We will be back with you Monday at 10 a.m. Eastern. I hope you'll be with us, and we will see you next time.